Good morning, everyone. Welcome to the Eurotrade. I'm Marcus D, your host. I've been trading for 18 years, and 12 years out of that, I've been trading for various prop firms, specializing in some of the more unusual products, such as different precious metals and also energy markets. All right, now, even though I'm Series 3 qualified, I am not a CTA, therefore everything you see here is for educational purposes only. Please familiarize yourself with the risk disclosure that Bruno posted earlier in the chat. And let's see what we have going on in copper today. So with copper, there are certain developments happening on the larger time frames as a result of this massive smash down that happened sometime in end of July. And with that, I'm actually looking for the price to crawl somewhere closer to 564, maybe 565, because this big drop is still considered a weak structure. So we're going to see how the price reacts. We've certainly made some headway in the last week, and this has been happening all the way from the time that copper hit 439 let's say 439.50. This is obviously a new contract, so we rolled straight into December, jumping over a couple of things, a couple of levels. Now I am in Belgrade at the moment, so you see I'm not in my usual place, and because Belgrade is not on the list of approved countries, I'm going to stay on the Combine whilst I'm visiting my mom for her birthday week. But yeah, so let's go back to the intraday timeframes so that we can see what intraday zoom in looks like. First things first, before I do anything, I usually like to mark off the Asia high and Asia low for this particular time of day. And then I want to see how the prices react around those areas. When I look at the London value areas, the value area from Friday is all the way down at 501.60. And there was a pretty decent attempt at a mean reversion, but bearing in mind what is happening on the larger time frames, I am kind of a little bit long biased on copper. Now gold is going into a bit of a retracement. Obviously we have the Tom and Jerry chase that I like to call it the Tom and Jerry. Basically you have one session, it does one thing, and then at the next session they start to effectively get it in the opposite direction on most days. And this is where the Asia high, Asia low can actually help you figure out what's going on. Is it a liquidity grab followed by a complete reversal? Or in gold's case, whether we're just temporarily reversing before it starts going back up again. Now, copper, like I said, it's in a little bit of a different situation. We're not at all-time highs, and there is still plenty of room to the upside. This is the reason why I am in this little long here. As an additional supportive factor, we also have GEX2 level that was sitting right around Asia high at 505. And when the prices started turning around there, there was a pretty decent opportunity for a potential reversal intraday. If I look at COMEX value area from Friday, we're literally just touching the value area low. Obviously, COMEX value is not going to be in play as a relevant area until much later on. When I look at it as a means to determine the open sentiment and whether we're opening below it, inside it, or above it, and by how far. And for now, we're just literally teasing that area. So we'll see what they do with this Asia range. But for now, I would like to see copper rejecting this GEX2 area, going back into the Asia range, and at the very least going through about 50% of it, maybe even a little bit higher. But I would be happy if I can get it up to 508, maybe even 510, but again, we'll see how things are looking in a little while. All right, hopefully everybody had a good weekend. Let me know how was your previous week, and then we can maybe have a little chat and a discussion to see how we can keep improving your skills. Now, trading is a never-ending skill improvement activity, and even after nearly 2 decades of doing this, there's still things that can be improved, and it's never perfect. Perfection doesn't exist. All we can do is just keep tabs on our mental triggers and control our risk to the best of our ability. And for that, we obviously have lovely tools that TopstepX brings us, such as this risk setting. Now, obviously, I do have a live account, but obviously this week I'm not going to be able to trade it, at least not until I'm back in England on Friday. Yeah, so far they've reversed. Who's they? The Wizards. The institutions have decided to try and bring it back into the range. So it's currently attempting to create a little morning star. And we're gonna see what's going on. Bruno is saying his week wasn't that great. Bruno, do you mind if we maybe have a little chat about that? So, did anybody else struggle last week? Because I did okay up until Friday, and then I made a little problem on on Friday where I thought I was in a micro, but I wasn't. I was in a full position. So overall, not terrible, but yeah, it was a little bit tricky. However, I think I traded Tuesday, Wednesday, Thursday. Those were green, and then my Friday was actually red. Let's have a look. Cedric is saying, good morning, everyone. Enjoy your time with family. Thank you. Yeah, my mom is turning 78. She doesn't look it at all. I usually have a driver over here who always greets me at the airport, and then my mom comes out to greet us, and he was like, oh my God, she's got better posture than I do. And I was like, do you know what? She's got better posture than I do as well, because I've got a bit of a nerd neck going on. So yeah, let's see. Out of the potentially problematic levels, we do have a GEX4 at 507, and obviously we're still inside the initial balance, which is the first hour of any exchange open. That's still not broken through. So the initial balance started with this doji candle, and if we can go above it into maybe a normal day type, so basically just extending the initial balance by the size of the initial balance, that's called the normal day type in profile. That would be enough for me this morning, because I don't think that I'm looking for some massive day today. I mean, we never know, but copper usually likes to move for the CPI and PPI releases. So with that in mind, let's have a look at the calendar actually, because that's a part of my prep for the week. All right, so we had some chats. We have some upcoming chats from Christine Lagarde. Much later today, I think. Although, let me just log in. Let's see. What's the times? Obviously working on my travel setup this time around with 4 screens, and I know that some of you had some polarizing opinions whether 4 screens on a travel laptop is necessary. But I have the Asus Duo, which is it already comes with 2 screens, but you know, because I've got chat and I've got, you know, the stream, and then there's, you know, the charts and everything. To me, 2 screens are a little bit too tight, guys. It's always a bit tricky. Right, let's see. Got some New Zealand rate decisions, but that's not really that relevant. Yeah, I mean, we have the FOMC meeting minutes, but it's not a rate decision, so that has to be a bit meh for copper. Copper doesn't really care much about it. Gold does. Gold would probably have a little bit of a reaction there, but nothing like they normally do. Right, so I see that they've posted the NFP as a tentative release this Friday. Obviously, as the government shutdown. Are they still in shutdown? How long is that going to take? Are we going to get NFP at all? Let's see. I remember one year, I think it was probably 2013, when the government shut down. As soon as it started, the whole Euro USD just died a death and never really came back properly. So I don't really see any kind of plans to end that yet. Yeah, interesting. Yeah, so we'll see how long the government shutdown is going to be. But for now, there's no real indications that that they're gonna go back to work anytime soon. Sana says, if you didn't have your Mac version and the need to be on screen, not looking like a dork, I'd say grab a Vision Pro infinite floating screens. Do you think that I don't look like a dork? I think I look like a proper nerd, but then Oh, Andre says, I live 170 kilometers away from Belgrade. Oh my God. Okay. Yeah, almost neighbors, right? What's 170 kilometers? It's nothing. Joe says, I just passed my combine with gold in this Asia session after the great start of the week. Awesome. Now take it slow in your new XFA, because I know that many people try to rush through combines and then they do, you know, pretty well. So I don't know how long you've been in a combine, but the primary purpose of any evaluation account is to manage to figure out a consistent approach that can last. So remember, in an XFA and any funded account, really, there's no end date, you know. So if you don't really have a decent approach that you can just infinitely repeat over and over and over, you know, that's clearly a problem. So if you take it slow and just let time do its thing, ultimately time is the only judge of anyone's performance. And yeah, if you are still, like, not necessarily you, Joe, but this goes for everybody. If you are aiming to just get back to funded, or, you know, to rush through the combines, but you've never really been able to hold on to an XFA, that's telling you something, right? It's telling you that whatever sizing and risk controls you have on your red days, they are not sustainable for whatever reason. It could be due to a high risk of ruin because, you know, too many large positions and too many trades in a day as well. All of that massively increases risk of ruin. Obviously works in a fine balance between your hit rate and your overall risk reward on your trades. So that all needs to be pretty tight in order for us to weather the drawdowns. And I'm going to remind everyone that a drawdown is just something that happens. As a trader, you will always be going through cyclical periods of doing really well. Then the market conditions change, then you might not be doing so well. Well, during those times when you're not doing well, that's the challenge, right? That's the challenge, to try and not blow up an account and to just try and weather it out. And almost becomes like a mental endurance game. How many days and weeks can you go until the market improves, or until you figure out which mental triggers are leading to the drawdown? Because sometimes it's the market, but a lot of the times it's us, right? It's us. The market might be amazing, right? But you're just not really either using the appropriate stop loss sizes, or maybe they are now too small for what the market volatility is doing at the moment. And I think that is the main issue that many people have when they're looking at their current risk model approach. So it's not just about clicking buttons. I have my own coping strategies whenever I get into a drawdown, and I don't mind having a tight loss limit. And whenever I know that I'm running into a traditionally slower period like the summertime, I will actually lock it down to like $150 per day, so I don't allow myself to lose more than that. And then I size down massively and just try and weather it. And then if I make $100, that's brilliant. But if I don't, then it's like, okay, well, it's only 150 down. And then once you start seeing that things are improving, then you can start going back and unleashing the purse strings a little bit on those daily loss limits. Obviously, when you're in the live account, there is a loss limit that immediately comes with it. So if you're not accustomed to working with a loss limit, it can be a massive adjustment as well, which many people don't weather particularly well, because we go into a live with a certain amount of cash in there, and you're like, yes, I'm just going to keep trading. But then that 3K loss limit, even on 1 or 2 minis, it comes really quick, right? You're like, wow, okay. And all it takes is just one day of losing control and 2 or 3 bad trades before you're knocking on the doors of the loss limit. So yeah. All right. Daniel says, I love your setup with the 2 flip out screens. Yeah, that's what I've got now. I don't know. I just can't, like, the 2 screens to me is so tight. I don't know. Maybe it's because of the stream, and because I look at, the options levels, and then I look at several products. I don't just look at one product. Maybe if I was just trading one thing, like back in the day when I traded just the crude oil, maybe 2 screens would be enough. And if I wasn't streaming, so, maybe you have your higher time frame charts on one screen, and your execution platform on another, that could work. But different folks, different strokes. So for me, 4 just works. At home, I've got 5. I don't think I'm gonna go to 6 at any point soon, but yeah, for me, 5 seems to be the right amount of screen real estate. Yeah. All right, so let's see what they want to do here. Just looking at the dome and looking at any potential signals here. A few people trying to sell in the middle of nowhere here. We've moved away from GEX2. So GEX2 is at 505. And let's see what volume is going to do. Let's go down to some lower time frames. Now, whenever I see messy volume on one time frame, I tend to start flipping through different time frames until the volume looks a little bit smoother. and then I make my decision of what to do. I mean, this down move had some juice in it, but now it seems to be slowing down a little bit. Still very early days. Like for copper, I prefer to trade close to the LME, but obviously we don't stream yet at that time. Joe says, yes, thank you always for the tips. Grateful to learn from someone with so much experience. I'm trying 3 to 1, risking 250, and that's to my stop, and taking 1 to 3 trades a day. Sounds brilliant. Yeah, sounds very good, Joe. Darren says, Deep, I'm new to the channel watching your stream. What entry model do you look for when entering a trade? So I have probably about 5 or 6 core setups, core playbooks. And my way of doing things is a very, how would I put it, rather a unique blend. All right, so we have some imbalance here on the dome at 506.20. There's 48 contracts there, so they're probably going to hunt that to the upside, and that's good for my long. So I'm going to stay in until that's smashed. So I use supply and demand concept on larger time frames to begin with, just like an overview of what those areas look like. Are we in the middle of a swing? Are we tracking through, some weak structure, like single prints as they're called? And then on the intraday time frame, I look at the profile concept. So I look at the strength of the auction. I look at something called the open sentiment. And then I have my own twist on all of that by using quantitative extremes, which are projected moves of how much something has moved over the last 10 to 14 days. And then those become your exhaustion points. So there's 2 ways of looking at them. If I'm suspecting a normal day where we're not really exhausting any of them and we're not massively ignoring them already during Asia or early London, I will actually take in the larger time frame trend and the profile developments to run my trade. So in that respect, I have failed auctions, I have auction fades, which are my concept, because Jim Dalton is the one who popularized market profile in 1986, but I always felt like I was missing a part of the picture there. So he doesn't differentiate between failed auction and auction phase. So what's an auction fade? Well, if you have the reference point of the first hour of trading, which represents something we call the initial balance. If we go higher than that to one side, and then that move fades, well, in my head, the auction was successful. It didn't fail, right? So we didn't just poke outside of the first hour and then come back to it to rotate. We actually went much higher or much lower, right? So to me, that's a successful auction. And then there are still times where, especially in commodities such as gold, copper, crude oil, natural gas, towards the end of the day, or towards the old settlement times, which used to be the old pit times, there is a possibility to fade that move. And that's something that I built my career on. So I call it the auction fade, and each of my setups have a particular intended target, which is what makes my approach from that perspective very systematic. But then I also look at the Asia high and low. It depends on what time of the day I'm trading, because this Tom and Jerry chase that I like to look at, it plays on the idea and the observation that sessions on a lot of the days will fade each other, right? So you have Asia going up, then London goes down, then New York steps in and they take it back up. Or one of them is really quiet, so one of them breaks out into a trend, then the next one rolls in and they sell it again. So it's like, it's the Tom and Jerry chase. They chase each other. So that's another one of my sort of directional bird's eye view expectation of what I'm trying to achieve. And because I'm a mean reversion trader just by nature, I'm always looking for fading, for the fade setups. I will, even if I'm looking at a trending move, I still want to see a pullback before I step in. So I have auction fade, failed auctions. I have something that I call weeb and sieb, which is effectively break of the initial balance, pull back into it, and then a continuation. That's something that works pretty well on gold. But my method also heavily relies on the time of day. So what is the expectation of a particular time of day? And it's not just the open. It's not just the open. So for me, there's this thing called the post-NY cut. It is taken from the Forex market, where every single day you have Forex option expiries. That is called the NY cut. And a lot of my commodities actually have a huge link to Forex products. Like, for example, gold has a very big connection to the Australian dollar. Crude oil has a very big connection to the Canadian dollar. Equities, arguably, on some days have a big connection to something like the Japanese yen. So, you know, all of that brings reversals in and around 10 a.m. New York time, which is 9 a.m. Central, and 3 p.m. UK time. So that is why you see a lot of volume coming through right after 10 a.m. in New York clock strikes. Now, London doesn't quite have that, so the only option for London is to just have this Asia reversal or continuation. Now, on most days, statistically, you will have the reversals, but every so often, you know, something like gold, they just kind of keep going, and you're like, well, where is this going to go? So that's where I turn to the options chain, because at all-time highs, the only reference points that you have can be measured moves, but I don't like that because they're a bit flimsy. It's like, well, where are we looking? So I look to the options chain to see where the open interest is, because it can show you how the institutions are positioned away from the all-time highs. And my quantitative extremes can also be projected away from the all-time highs, so even into like a higher area. So all of that to me brings me a pretty, you know, clear situational awareness on most days. But, you know, like everyone, I'm not perfect. There are days when the market is either too quiet, that's a huge mental trigger for me, where the market is just not doing anything. And on those days, I really try hard not to flip and flop around the same level. So if I've decided to get into a trade, I will just commit to it. And then if it just doesn't work out, it doesn't work out. It's fine. So yeah, it's obviously something that's come from many years of me tweaking my system as different market states were happening, and I found that whatever I was doing at the time was not quite enough to tell me how I should be adjusting my positions or my stops or my targets. But yeah, generally I do like volatility, but I don't like intra-candle volatility, which is why I hate NASDAQ, right? NASDAQ is very liquid, but by the way that it moves intra-candle, even when you're looking at something like a 5-minute chart, especially during New York times, it just irks me. You know, it like throws me off completely emotionally. And as a trader, the first step to have control over would be, how are you behaving and feeling in a position? And if you are feeling worked up whilst you're in a position, your rational thinking just goes out the window, like completely out the window. So for me, that's not an option. I've never been much of an equities trader. Obviously, we started these streams with the intention of trading DAX, but that's not still the case. So at some point, DAX will arrive, but we don't really have a timeline at the moment. However, DAX is much smoother, right? Once DAX decides to go, there are very few days when it goes into that sort of seizure-like activity intra-candle. Even during Trump tariffs, it was still super smooth. It was moving a lot, but it was also very smooth. So it would make up its mind on direction, and very rarely would you see a complete change intra-candle on a 5-minute chart where, you know, we started off red, and then it suddenly flips to long in like 3.5 seconds. That's the part that irks me with NASDAQ. But DAX doesn't have that. It's a very, very smooth product. And copper arguably doesn't have that either. Now gold, there's some days where me and gold are not really gelling because of it, because it's also very spiky. So I have a bit of a love-hate relationship with gold. It's beautiful, and I do enjoy trading it sometimes. But as soon as it starts that craziness and it's like up and down, up and down, up and down, where are we going to go? Where are we going to go? I'm immediately like, ah, it's so annoying. And I recognize that about myself, and I know that that's one of my mental triggers. So at that point, I will either close down the position, go outside, play with the dogs, touch grass, hug some trees, and just be, working on calming myself down. I also like yoga nidra for that purpose, where it just completely takes you away from the charts, and you have to go and lie down and turn inward. It's a very mindful practice. So that tends to calm me down. But it does take, for me, even to this day, it takes me about an hour before I'm like out of that, worked up state. But as long as you recognize that about yourself, then, it's okay. So, yeah. How to use ATR. So here's the thing. ATR and ADR to me are two different measures. ATR is typically used on a lower time frame across a certain period of candles on the day. If you ever watched At the Buzzer with Coach Jay and Coach Paul, you know that Coach Paul uses 2 times ATR on a 5-minute chart to work out what the stop loss size should be. So that's the use of it, to figure out the volatility. And to me, I use something similar for stops, where I will either look at the 30-minute ATR, so whatever ATR is saying, like for example, right now on copper, it's telling me we have 18 points, which is 36 ticks, and it tells me that my stops should be 36 ticks. But I also have another way of measuring my stops, which is taking my average session range across different days for a particular session. So then I will divide that by a certain number, and that becomes my overall measure of volatility, and I base my stops on that. But for the ADR and average session range, that's only to be used on the daily chart. And I suppose you can use ATR for that purpose. However, the way I look at the exhaustion of the ADR or ATR is almost like a volatility measure, where it's tracking the volatility over a certain number of days and almost projects the volatility band, like how far up or down do we have as a statistical space. So that's probably the first thing that I introduced in my trading back when I was a swing trader, and it massively helped me to get better at timing my swing trades. So that's something I've been using probably for 17 years now, so a long time. It also prevents me if I'm already like let's say I'm in a trending move and we come across the right. I'm just going to close this because I'm talking and I feel that my attention is just a little bit divided between things, and I don't want to give back the couple hundred here. Yeah, so I basically have days where you're still working a trending move with the overall trend, but you're coming up against the average daily range high, for example, in gold. So what am I expecting at that point? Like, how much was the actual move in the run up to that area? How did we get there? Was it a slow, sustained, gradual increase in volume? Or was it just like a spike and then we shied away from it? Or the third option would be if we slowly got up there and then ignored the exhaustion, and then it just kind of kept going. So another reason why I closed this, because we're still inside the initial balance. So we are nearly like we're actually 2 hours into the London session, and we still don't have an extension of the initial balance, and that's indicative that the move, whatever they're trying to do, they're still very much inside the range. And that's another reason why I don't really want to stay in for too long. If we are tracking through 2 hours of London on a day where we're going to have a very decent move for London, the initial bounce should be extended already. Pretty much already in like 30, maybe 90 or 120 minutes. But as soon as it starts building structure, so if I can show you my other platform where I have a TPO profile, and this is my indicator, it's from Blatek, it's my company, full disclosure. I have a software development firm for trading tools. So you can see we already have 5 TPOs. Now each of these letters represents one 30-minute candle effectively, and they assign a letter to it. So the first 30 minutes is A, second 30 minutes is B, then we have C, D, E, and so on and so on. But in a trending move or any kind of a mean reversion trade, you really want to see the market continuing to go. Maybe build like 3 TPOs. And every time I say that, as a Star Trek fan, I really want to say C3POs, but I'm not going to. So yeah, now we have 5 TPOs in a row. That's building structure. So the likelihood of this suddenly going into you know, a massive up or down move, it's a little less, right? Because we are stuck in a particular area. So that's one way that you can look at the strength of the move. This is definitely not strong. It's just ambling around in the same area. So until that changes, I actually don't really have any more setups here. The next setup would be if it falls much further to exhaust the average daily range, which is closer to the London value high from Friday. That's sitting at 502. Let's kind of round it up. So until it gets there, I don't have a setup. Or alternatively, if we go all the way up to the former Asia high, which is sitting up at 512.50, we can maybe do a little stop run in reverse and then perhaps pull back to VWAP and then maybe another trending move with that larger time frame development. But I don't know whether I would be getting involved in shorts today. Just looking at where the value area is, I mean, if we are still inside, anywhere inside the Asia range, to me that would spell that we are in a quieter day and that we only really have the Asia range to work with. But because the larger time frames, I would prefer to keep getting involved either at the Asia low or even further down towards that value high for London. So that one would be more of a, let's say, a pullback on the daily chart and then a reversal with the larger trend. So I would still be working with that daily chart and basically ignoring all the opposite side of things. So, you know, when I say I'm a mean reversion trader, I'm not insane, you know, so I'm not like, oh, we're smashing all-time highs on gold, let me short it. I'm not like that. I used to be. I used to be. I'm like, well, how high could it get? But that sort of mentality has hurt me quite a few times over the years. And then I worked really hard on my continuation setups. So some of the continuation setups I have, I mentioned one, which is C, but strength from inside the initial balance. So we smash upside, then we pull back into initial balance, and then maybe hit either some kind of an intraday demand or VWAP or anything that can kind of lend some support with volume and with any sort of order flow reason why a price would actually turn around there. And then I would try to get in on it and run it to the average daily range high exhaustion point. So that's worked pretty well for me. But I'm also very good at sniping proper mean reversion trades. Sometimes, albeit not too often, but I do like initial balance orb setups on shorts for RBOB in particular. RBOB is gasoline futures. So when we open within a very particular space above the value area from the previous day, let's say we're opening within like 1% up to 1.25%, maybe even 0.5, but it has to be opening above. Why? Because energies products on a lot of the days are short biased. So every time I look at anything energies wise and people are like, oh, I'm going to go long, and I'm like, really? You're going to go long? Ouch. And I'm just, you know how you have permanent bulls? Well, I'm almost a permanent bear on energies. So I will largely stay out of longs unless it's like settlement and then we went short all day, but there's some sort of a wobble going on after, either into the settlement or right after. That would be the time that you might see me do a long RBOB trade. I think I did it last week as well. Katrin says, can I look at DAX, please? So I haven't looked at DAX today, so I might need a little bit of time to set that up. Because remember, I'm also on my laptop, so I generally trade precious metals. Because, you know, if I'm on doing these streams and stuff and we don't have DAX, me talking about DAX is completely pointless, right? Because like, oh, Dee, when's DAX coming? And I'm like, I don't know. I really don't know. But I can give you a little bit of an overview, I suppose. Let me try and recycle one of these trends. Where do I go? Okay, let's do over here. Let me also find it to see what the value areas are. Since I'm out of copper now, so we can talk and jump charts. Yeah, so do I have a template? Probably. Yeah, so I don't actually have DAX set up here. Give me a second. What is going on here? It's a bit messy. Hold on. That looks a bit better. Okay. Need to check the times. Yeah, times are wrong. Because obviously we need proper data points with sessions and stuff. So. Almost there, almost there. And I think the most valuable thing with DAX would probably be looking at the average ranges and some options activity. I like to convert the options levels from ES into DAX. I think that works pretty well. And I mean, DAX has some options on it, but I don't think it's as lively as our friends over in the States. Okay, so let's see what that does. Now, DAX, a very quiet Friday. Very quiet Friday. So that's not going to be that useful. But when it comes to London, it's the London value low is sitting at 24,510, and it looks like we're rejecting that right now. So it's a value low reversal. Well, let me drag this over. This is trading view. If we had accepted the value, I would have been more inclined. Now, 2450 seems to have been the kind of a pivotal area for quite a long time on DAX. So let's see what the massive time frames are doing quickly. And again, yes, sorry about the white charts, but you know. All right, so you see what I mean? Like it's constantly just like rolling around that 24,500. It's almost like some sort of a ceiling that everybody's considering as a good area to run shorts from. So Friday had a bit of a sell-off. Now we seem to be continuing that, but it's so early. I mean, it's an equity index, obviously. 4-hour chart is trying to go below the previous session low. And if that holds, perhaps there's some shorts to be had on DAX today. But as usual, the open brought pretty high volume, and right now we're just sitting in that high volume. So until it actually goes outside of that area, you can almost use these high volume candles as support and resistance, right? So the orientation point for me would be 24,531 and then 24,381. If it doesn't make a committed move outside of that, I would just trade that as a range. Like put on your Dolby hat and then just look to get involved at least somewhere near the high and the low. But I wouldn't be trading momentum trades straight in the middle of nowhere, because to me right now, with these big volume candles, it's established a range. Until it leaves it, we have to make sure that you're doing range trades, right? And if you don't want to do range trades, just stay out until you see how it's actually behaving around those points. And unsurprisingly, that's the initial balance for the day, right? So far, so still inside the initial balance. I usually don't like holding my trades whilst we're in the initial balance still. Once we're out of it, I can either try a failed auction, which in a way would be a range trade, right? So if you have an initial balance, let's say we go lower, then it pulls back in, then it rotates. What's that? It's a range trade, but you know, we coin it failed auction just for my own sanity. But yeah. See, my sister has joined us. Okay. Moon Trader says your face is kind of glowing today. Probably just skincare. Yeah. Ahmed says, NQ just opened the door for shorts all London session, retracing all the way back to Asia lows. Yeah, so that's the typical reversal, London reversal trade on NQ. I don't trade it, but yeah. But yeah, same setup. I just can't stare at the candle. To me, emotional regulation in a trade is more important. But, you know, everybody's different. I think it's also a matter of me staring at the charts for nearly 2 decades, and you just get a little bit irked after a while with certain products. Mystical Orb Trader says, Jesus Christ, what a night in gold. I have a 50K funded that only had 38 bucks in drawdown last week. Somehow managed to recover it with one MGC trade with one contract at a time, sitting at minus 662 at the moment. Yeah, so gold is a monster. This is a classic example how micros can actually stack up. Because even on one micro, think about it. Gold moves like 500 to 600 ticks sometimes in a single session. And what's that on a micro? Well, even just one micro, it means that you can easily get to 500-600 bucks on the day on the trending move. Now, you're not going to get trending moves every day, so obviously you have to pick your battles. But yeah, you don't need to trade with size. Like if you have enough ticks, if a product offers enough ticks in a day, size should not be the primary thing, because it offers a lot of ticks. And to me, it's actually a flex to trade with less size, but more ticks captured. You know, to me, it's not a flex to do like, 50 trades and then, I'm up 3 grand. That's a lot of work. It's a lot of work. But if I can find one stellar setup and I can snipe it somewhere close to the lows or the highs, and I hold it for like 4 hours, and I make, $1 grand on 2 micros, to me, that's the goal, right? That is what I always try to achieve. less trades, more ticks, and not paying commissions. So paying one round trip to the broker, in your face brokers. So to me, that's the best way to trade. And every time I think about it, I always kind of laugh, going, yeah, the brokers are not making money from me. That's a flex too, right? I think that was the biggest thing for me back in the day, where I went into prop firm and I realized there were some scalpers there, and they were always worried about their like commission costs. And I'm like, I've never even thought about that, because obviously if you're going to make 5 ticks per trade, the commission, the round trip cost is going to eat into that. But if all of my trades are 50, 60, 100, 120 ticks, sometimes even 300 and 400 if I catch a swing trade intraday, you know, they're only getting 1 round trip cost from me. They're not getting any more. And to me, that's worth its weight in gold. I don't know. Santa says gold looks like it may reject the highs. Not shorting it though. Maybe try to ride it back up. Yeah, that's definitely a good way to look at it. Let's have a little gander at gold, shall we? Ah, yes, we've consolidated. This is the time of the day when gold just goes flat. The only time of the day. Yeah, so these buying wicks, you know, the buying wicks, every time I see those, I'm like, nah, there's still some buyers here. There's still people sitting. Whoever tries to pick the tops, you know, just don't. Just don't. Like, look, if the gold is going to roll over into a downtrend, that's going to become obvious, right? And every time I'm trying to catch a mean reversion from an all-time high, I will wait. You know, I will wait until there's unequivocal momentum to the downside and then jump on that. Usually, I like to see the price action melt through VWAP. If we're still above VWAP, I am not touching shorts on gold. Not touching it. No matter how great the setup looks, right? It's just the fact that we have this on the daily chart, on the weekly chart. Like, who in their right mind would look at this and go, yeah, that's a short? And no matter who you are, scalper, whatever, like, why would you do that to yourself? It's so much stress. But if it is going to do one of its make an all-time high, then smash down, I would rather catch that when we're already halfway through and definitely about to change sentiment on the day in the candle on the daily chart. Because at that point, if you have a huge selling wick and you see that we might be opening below value for COMEX, so much later in the day than now, then you have some levels. It's like, okay, well, it's bled down through VWAP. We're below the value area. We've smashed through some options levels. Yeah, this is going to keep going, isn't it? And at that point, I will short gold. But until such time, I ain't shorting gold. I would rather, like Senna, go to a pullback, maybe down to VWAP, and then see what they want to do there. And if they reject VWAP, well, that's your setup, right? That's your trending move. But yeah, so far, maybe there's like a tiny scalp there. I'm not a tiny scalp person, so I'm sitting out of that, obviously. Where was the low? No, this is where, when it goes into a trend, you have to go a little bit backwards. Okay, so it's here. Yeah, straight up trend in Asia. So yeah, test the VWAP, and then potentially a continuation. Now, Mondays can be a little bit quiet, so I don't really like to trade swings on a Monday, because typically what they do, they're either, I don't know, hung over from the weekend. Why it happens, I'm not quite sure, but they're either, you know, trading it in Asia, and then by the time that we come to trade it over in Europe and the States, they've already done whatever, and then we end up with like really small, spiky price action, which I don't really enjoy. Daniel sells 4K soon on gold. Yeah, it's pretty close. 4,000 today would be sweet. Well, I shy away from projections on when things are going to happen because, you know, I don't have a crystal ball. I don't know whether 4K is going to come this week, next week, tomorrow, later today. Nobody knows that. And to me, it's a bit of a waste of energy to try and guess. I'm just going to follow whatever the profile is telling me. And right now, what it's telling me is that we're building structure. So, yeah, still not much in the way of initial bounce extensions. Let me just change a couple of things here on my charting platform because I have it set for LME open just to see what they want to do with it. Oh, to give you an update on my APIs, I ran into a problem with live orders, and I thought that that me and Coach Robert kind of figured out why, but I don't know whether it's like whoever has bots, and if you are in Topstep Live, are you able to run them on your live? Because for me, it throws out the message that the live accounts are not enabled. So I don't know. I did ask support, so we'll see when they come back. What they say. Maybe we need a different API key. It's quite possible that they haven't really enabled it for live, but we'll see. You know, we'll see what they say. It still works perfectly in combines. I'm not able to have XFAs because of the live, so I don't know. But yeah, the XFAs are sim as well, so I'm pretty sure that works. However, live, it literally just throws up like cannot fill order. And initially we thought that it's because of the historical bars. So I used the API documentation to force everything to go into to create the historical bars in all the calcs with the live data. But then when it came to the actual order placement, it just said computer says no. And I was like, well, this is weird. So we'll see. We'll see. Desmond said, D, I have made my money in XFA GC long already and have been shorting GC in my combine on max 3 MGC and up 400. Yeah, you're probably more scalpery than me. Yeah. Just range trading the initial bounce. Yeah. But yeah, still spiky though. There's still buyers around. Every time somebody sells it, they buy it back up. Every time someone sells it, they buy it back up. So yeah, still a lot of bulls. Let's see what time of sales is saying. I don't have bookmap today. I mean, I have it on my computer. I just can't be bothered initializing it. It'll be another screen to look at. I'm a little bit tired from the flight yesterday, I'll be honest. So I don't want to do anything too labor intensive. Let's have a look at the dome on GC as well. Okay, no real imbalances on the dome, but a lot of buying. Look at that. All singles. Single, buying. Yeah. So this is what I mean. If you're going to short gold, this is very short term and you have to really watch it. And, you know, with the way I trade, I find a setup. If I think it's more of a shorter term scalp D style, so it's got like maybe 50 ticks in it, I will still keep it for, you know, 30, 40 minutes. And that's a scalp for me. And then, you know, I will bail like I did on copper. But if I find that we pull back, like let's say we do get the hypothesis of gold pulling back to 39.48, to VWAP, then we start to reverse, I will basically go in and just walk away. Just leave it. And then I'll come back to it and go, okay, where are we? And if it's a really strong trend, it should take over. So it shouldn't be this whole push, pull, tug of war. It should be like, right, we still have buyers. We did a good pullback. There's some bottom pickers there intraday, but with the trend, the clever kind. And then you just leave it. Then you come back 2 hours later and you're up like 200-300 ticks. Like, okay, I'm taking that. Like very low stress, very low stress. I aim, and anytime grasshoppers come to me, over traders, they're like, oh, I can't make it work. And look at this. So there was 117 lots up here. That's liquidity. So if we are truly still in an uptrend of gold, which we are, that's going to get taken. So they're just sitting there going, no. But maybe they're exiting their positions. This could be we don't know. There's no way to know which side these guys are playing. It could be like somebody trading with a little bit more size, and they're thinking, well, actually, we need to take some positions off. And then they will put these orders in, and they want them filled, obviously. But they're all longs that are bailing out of their positions, and then they become visible in the dome. But only a singular price point, and that means that's game for taking out. Basically front running that. The big orders, and then taking the piece of the action as the liquidity gets reached up there. Yeah. So yeah, to me, in and out, staring at the positions, I am totally over that. Like I haven't done tick by tick staring and, like losing my eyes for a very long time now. And I have zero desire to do like 100 trades a day. I think that's a different problem, wanting to trade more. Because remember, we're here to make money. We're not here to trade more. So 1 to 3 trades whenever somebody comes to me who's an overtrader, I will limit them to 3 trades per day. And the stop loss and the daily loss limit has to only allow for 3 trades. And I also force them to lock their risk settings. So they're like, oh my God, what do you mean I only have 3 attempts? And I'm like, yeah, it's going to make you think of the quality of the setups that you're taking. And, the scalping can work like that. Oh, I think it's going to short. Like the whole I think part of it, it cannot happen, right? Even if you're a scalper, it needs to be a proper setup. It needs to have, all right, well, this is a high, so therefore I'm going to be looking for iceberg orders to kick in. And that becomes your setup, right? So that's a scalp. But if you're just kind of looking at it and going, well, Asia high is sort of resisting, oh, let me try short. That's not longevity, because that's kind of like working from almost like an emotional side of things. But if you do have an actual setup that involves resistance around the Asia high, and then you're shorting that based on whatever you're seeing, that's a valid setup. So just make sure that you don't get stuck into discretion scalping, because whenever you start malfunctioning, and we all malfunction, we're humans, we're not robots, that's not going to be the best thing. So you're going to find yourself suddenly doing silly trades, flipping and flopping, and then you're like, 3-4 grand down on the day, and you're like, why isn't it working? So a repeatable activity is what you want, regardless of the style that you're trading. Whether you're a scalper, whether you are somewhere in between, whether you're a range trader, whether you're a trend trader, you need repeatability. So if you don't know to recognize your setup, your playbook, this is why we talk about playbooks, right? We talk about playbooks where we all have defined playbooks and everybody's different, but most of the time, whoever's been doing this job for a little while, you will notice that we're all coming to the similar conclusion. Now, the duration of the trade and maybe stop sizes and targets are different, but let's say me and Coach Robert are analyzing a chart. we're going to come to the same conclusion, right? It's going to be same sort of three options of what could happen at a level. So it's either going to reject, or it's going to go into a trend, or it's going to be a little, so it's going to be mean reversion, little scalp away from a high, or a continuation. That's it, right? So most of my hypos on the day will be 3 or 4 hypos to account for those 3 conditions. So yeah, there's no fourth option. It's either going to go into a mean reversion, sideways movement, or continuation. So once you start seeing the market in that respect and just going, there's 3 options here, which one is it going to be? And you can solve that, then you've got a repeatability in no matter what the range is, right? So one day the Asia range might be really small, another day it might be massive. And the bigger the range, the less likelihood, so the bigger the Asia range and the more that it exhausts the entirety of the previous day averages, previous days averages, so multiple of days, the less likelihood of a clean move in the continuing direction. Why? Because it would take too much energy, too much volume. And if you already had a ton of volume that they've all done their business during Asia and or London, how much space do they have? So they need more legs if they're going to take it higher. How do they do that? By selling some. Because the other guys who step in, like let's say we get LME guys coming in, and they're like, oh God, Asia's pushed gold into an all-time high again. But we can't make any money here. It's like, how is this going to work? So what they will do, they will use a portion of their inventory to dump the inventory, causing that pullback. And then they get to a more sensible area that has more inherent risk profile in it. So, more profit margin, if you want to call it that. And then they go, okay, VWAP, that was good enough. Let's push it back up. Let's make some money to the upside with a trend. That's how it happens. It's not some mystical, oh yeah, they're stepping in to go to get some juju done on us. They don't care about us. Oh, Paul, sorry, I missed your thing. So have you looked at RB today? The roll is on the 16th of October. So here's the thing. I think that with energies markets, you get 3 weeks of good price action. I haven't looked at RBOB yet because I don't really trade RBOB this early. We can have a look at it, but, my main session for energies is NYMEX, not London. There it is. And remember, Paul, I'm short biased. Short biased. And actually, we can't look at RBOB, without crude oil because they're super connected. To me, this is a bit rangy already. Let's see what the weekly chart is doing on crude oil and RBOB. I always start my week by reviewing the big. So this could go up to 191.20 or so. I would be short from ballpark 91.20 if the opportunities present. But yeah, bearish engulfing, plenty of room to the downside to the next range. So where's the next bottom of the range? All the way down at 55, right? So yeah, I would not be looking at RBOB longs in this area. So bearish engulfing on the weekly. Previous week, crude oil hitting the conterminus line there. Basically a point of a market shift where it bled lower. Yeah, that's looking bearish to me. But let's see the daily chart. And again, spiky attempt at a reversal. Yeah, I think this is your classic London tries to push it up. And then NYMEX steps in, or pre-market would be good enough. I love shorting RBOB pre-market. because it goes into these like extended auctions, and it looks great, and then it all just rolls over very sweetly just before NYMEX, and you're like, but yeah, let's have a look at our bubble and crude oil, the crude oil options first and foremost. Let's see where the interest is. We're in November, so CLX. Okay. Let me get rid of the conversion. Okay. Yeah, so crude oil already has an implied volatility, which is basically ATR high. It's the same thing. Already at 62.20. I think we're still in negative gamma environment by the looks of it. GEX2 is causing some trouble here at 62. Unsurprisingly, we established the initial balance at GEX3 at 61.50. If we manage to go lower than 61.50, we have a nice big space down to 61 and 60.75, where the former sort of core resistance in a gamma wall from the 0 DTs is located. That would be a nice little target. There is a small chance that we go up to HVL area, so that's a gamma flip area at 62.50. But frankly, I would be very surprised if we go any higher than 62.50 today. So yeah, again, I'm short biased. The bright. So yeah. Which volume indicator am I using? Deeyana. Sorry, probably butchering your name. Just the standard volume from Topstep. I actually really like it. So if you just go volume, you'll see this. That's the one I'm using. The histogram, vertical histogram on the side is volume profile visible range. I don't use the visible range much on lower time frames, but I do like to use it on large time frames, so 4 hour and higher. And that tends to give me the idea where the little caves are, where the little low volume nodes are. But I already know what I'm seeing because I do supply and demand analysis on larger time frames. So you can actually see the single prints as they go moving away. So you don't necessarily need to stare at the volume candle to know that before we did this, and this was a volume level area, as you can see, and now we built up volume because we went through it. So it's still a lower volume area. But let's expand this actually. Let's do RBOB expansion. All of this is one big range, effectively. So where is the lower volume node? Well, there's a little bit of a lower volume node around 185 on RBOB, but really not until we reach 170. Everything is pretty thick here. So yeah. Yeah, I'm still short biased. Still full wild. Right, let me go back to see what gold is doing, because we do have a little hypo on gold. But yeah, no change in the energies for me. And for that matter, no change in gold either. So if we get to VWAP, reverse, that'll be good. And what level do we have around VWAP? That is... it would actually be a former implied volatility area, which happens on gold a fair amount. They smash through it. Think of the average ranges getting exhausted, and then we ignore them, go higher, then the price goes down, and that former exhaustion point is now a potential support area. And if you can also match another level like VWAP, Globex VWAP, That's a pretty juicy area for continuations. And then if we go lower than VWAP, well, then we may have a more serious reversal in progress, in which case I might be interested in shorting gold, but not whilst we're above it. Not whilst we're above it. Right. Desmond says, I intend to hold my short till initial bounce low, 39.53. Okay. However long it takes. I'm not scalping. Okay. Yeah. I mean, to me, shorting all-time highs is pretty risky, but you know, I classify counter trend trades. I classify counter trend trades as safe, dangerous, and bonkers. So dangerous would be if you're in a relatively strong uptrend, you're tagging Asia high, you know, but it's kind of a little bit resistant, and then you run a short. It's like, it's risky because you're not, you know, you don't really think that they're gonna immediately go away from it. And bonkers is when something goes into another all-time high and someone just shorts it blindly. It's just like, what are we doing? It's like, you just made a higher high. Just give it space. Give it space, the room to breathe. And to me, those are the crazy stuff. Especially if it's not a scalp. If it's not just like, yeah, I'm just going for a liquidity grab, and like I'm gonna grab 10 points out of it. Like I don't really want to hold it. That's okay. But for those people who are like, all-time high, I'm shorting this, and I'm gonna hold it until the cows come home. You're like, cool story, bro. That's bonkers to me. But safe is when we, let's say the hypothesis is that we get to Asia high, like now, smash through it, so there's that liquidity grab, so it's like, okay, well, you know, there's something to it. So I'm not opposed to people shorting here. I can see why you would do it. But then the safer short for me would be, we completely rotate to VWAP, we fail to reverse a VWAP, we open ideally either inside value or, I mean, that's not going to happen today because I'm just looking at the Friday value on gold, and that's like not until 39.14. So that ain't happening today. But yeah, sitting below VWAP, maybe tagging Asia low and then going lower than that. To me, that would be like, okay, they're reversing. So that's a safer counter trend. So there's safe, dangerous, and bonkers. Asim says, who the F trades gas? Commercial hedgers and users and producers of gas, of course. It's one of the largest, most valuable commodities in the world. So a lot of people, right, trade natural gas. Natural gas moves like 200, 300 ticks per day. Gasoline futures move 500 to 600, and it's actually more like the NASDAQ of energies markets, because it's pretty lively. But yeah, natural gas is actually also short biased, unless, so here's the thing, this year, we would need colder than average temperatures, specifically in the Midwest, in order for for natural gas demand to show up seasonally. So I've been doing some research on the way over in the plane, and I was just going through like seasonal tendencies and stuff. And I've been trading natural gas for years, not super actively. Like, it's not like something I trade every single day, but in a month I would probably do about, let's say, 5 or 6 natural gas trades. So I'm still short biased because I don't think we have cold weather just yet that would matter. But yeah, in order for me to start kind of longing natural gas, I would like to see the open interest maybe starting to increase. So you would use a CME website for that. At the end of the day, you see whether it is. But whenever they do this move, again, I would short that closer to the NY cut. So I would like to keep shorting it and keep shorting it until either we get colder than average weather or until the open interest starts showing up, that there's new positions stepping in. So if we are then somewhere in and around the demand area or moving away from it and reversing, that would be pretty good. Right now we're still trying to go through the nearby supply. So there's some signs of life, but they still fight. Like they're still fighting. Every time they try to go higher, somebody comes in towards the end of the day and keeps shorting it. And until that changes, until we get one day of like clean up move that doesn't close oddly with the selling wick, probably still not time for natural gas longs. But yeah, a lot of commercial hedges. And I wouldn't say it's a very speculative product, because it will be mainly people who need to be in natural gas, but it's a great intraday product for me. I quite like it. Yeah, so definitely not cold yet. We just had a heat spike here in between Midwest and Northeast. Temperatures are supposed to drop pretty quickly here within the next week, but who knows how long that'll hold. Yeah, that's exactly what I've been reading about. And then even when the temperatures come, we will need much colder than average in order for natural gas demand to truly start increasing and to start impacting price. So there's a little bit of macro analysis that goes along with the energies markets. Not too much. Like I would say that 30% of my decisions are probably macro. But yeah, it's not time. And even in the UK, so right now I'm in Belgrade, so we're pretty south Europe sort of situation here. But in England, like it's literally gone into warmer weather. Like we actually have worse weather here in Belgrade than I do back in England. It's actually like a warm, there's not even a chill in the air. Like before I went to sleep on Saturday, I was letting my dogs out, and I've got 8 of them. So, you're always like opening doors. I'm basically just a glorified dog doorman at this point, doorwoman. But yeah, 1 goes out, then 2 of them go out, then 3 of them come back, then the other 2 want to go out. So you keep opening the doors. And usually when it's like pretty cold, you open the doors and you get this, this like chill. There was nothing. Like I literally opened it up. I barely knew. Like if I didn't know I opened the door, I wouldn't have known, because it was just like almost the same temperature in and out, ballpark 18, 19 degrees. Paul said, you said Belgrade, what time is it there? It's just an hour later than London, so at the moment, it's coming up to midday, so yeah, 11:53 a.m. So yeah, it's only a 3-hour flight. Like it's not like it's super far away from England, and it's only an hour difference between. So Belgrade is always 1 hour later than the UK. So yeah. So why are you asking, Paul Anthony? What is the crime is saying, yes, winter is coming, but wouldn't people buy natural gas now when there's less demand and prices are cheaper? Well, not really. So the way commercial hedging works is only when the actual demand shows up. Like they wouldn't just randomly pile on the storage supplies, right? They have to see whether there is any demand for it. And as the demand grows, that's when they need to adjust their inventory. and that's when they need to buy more, because you wouldn't just buy a commodity to keep it, because there's storage costs and insurance and like extra things that you have to consider. And you will only buy when, like, let's say you're a producer of natural gas and you have someone who supplies natural gas to people, right? So they're the users. They will need to come to you to go, hey, we would like to buy that many barrels of natural gas in the run up to whatever. So that's now a forward cash agreement, effectively, right? And at that point, as a user of natural gas, you may want to lock in the price that you purchased it in, to basically remove risk via hedging in the futures markets, to lock in the price that you actually paid for it, to protect yourself from having to pay more in the future. So this is how commercial hedging works, right? And then they will need to do a hedge in the market, locking in the price, and then they don't care whether natural gas prices go up or down, they're locked in, right? So they remove the risk of price fluctuations in the future by doing a futures hedge. That's why they will get involved as users of the commodity in the actual future space. And similarly, as a producer, you may want to hedge against the falling prices, because if there's no demand and the prices fall even further, well, now you have a whole bunch of stuff to pay for, like storage, insurance, everything, but the commodity is falling in value, right? That's a terrible thing for anyone trying to produce something. So yeah, they will also hedge their prices to protect themselves from further falling prices, and it is this whole, it's this whole thing. So yeah, it's yeah. Paul says you were talking about the weather. Well, yeah, because weather impacts natural gas and crude oil prices as well. Yeah, I was talking about the weather because it directly relates to trading. I didn't make that clear. Did I not make that clear? We're not just talking about the weather randomly. We're just talking about how cold is the winter going to be, right? So right now it's not very cold, so there's no point in people buying extra natural gas outside of the normal amounts that they would normally buy it for. Yeah. All right. All right, so I'm not really seeing anything else here. Like I said, I have this one hypothesis on gold that we're going to test VWAP at some point today, and that would represent a pretty decent opportunity for me. Maybe I'll do a bit of personal trading today. Don't know how much I want to spend staring at the charts today, because my mom won't be very happy. She's saying it's my birthday week. So I'll probably go and spend some time with mother. And yeah, I'm still bearish on energies markets until that changes. I would just be looking for, rallies and then trying to sell against those when opportunities present themselves. And yeah, that is it. Nothing really much else to report. Bullish on metals, bearish on energies. What else is new? All right, I'm gonna end the stream here. This was pretty fun. Oh, Paul Anthony says, I have 5 cats and they keep interrupting. Yeah, imagine with 8 dogs. I mean, to be fair, my 8 doggies are pretty cool. They're a bit loud sometimes, but generally they just sleep. Like a lot of the times I have 5 of them when I'm doing my England streams. I keep saying London, I moved out of London. Yeah, and they would just be dotted around the floor. There's usually somebody on one of the chairs in the background in my main office. Sometimes if it's a black and tan dog, you can't really see them because they like blend into the background. But if it's one of the rubies, you will definitely see them. So yeah. All right, so new week, new month still. No NFP, tentative, still. We'll see whether we ever get non-farm payrolls before the government actually decides to go back to work. Didn't they say there's like something like 700,000 furloughed workers now? like what is going on over there? You know, I know that UK is in trouble, but yeah, don't really understand why they went for the government shutdown. But hey, October seems to be the time when they usually do it, because it's usually in and around this time of the year. So maybe there's something to that. Yeah, we'll see when they decide to come back to work, and then we may have NFP. Maybe. In the meantime, have fun and lock out those risk settings. Don't allow yourself to control yourself when you start malfunctioning throughout the day. If you notice that, just immediately step away. And hopefully you have your risk settings locked up for the day. Now, I'm on a combine. I'm not going to be doing that, so don't need to. But if I was in my live account, just to clarify, I am in Serbia, so they are not on the approved list. So therefore, I cannot trade my live account while I'm here. So for the next 4 days, I'm going to have to stay on combine. But yeah, so if you are malfunctioning, this lock risk settings for the day, that will save you. And you have maximum trades per day. I love this, absolutely love this feature. In love with this feature because you can set it to 6 or 10, or I like to set it for usually about 5 for me, because with the scale ins and scale outs, the platform actually counts each scale in and scale out as a trade. But if I go over that, the platform is just going to stop me. Even if I go crazy, it's just going to stop me at 6. Symbol blocks, best thing since sliced bread. You can block all the full symbols and just trade micros. We've seen that one of you managed to completely turn around and nearly a blown account only trading 1 micro gold. That's nearly impossible to do, so you need to pat yourself on the back. And the fact that you did it with 1 micro, that's like wizard status, man. Full respect. But yeah, so make use of all these risk controls and stuff there, because we want to save ourselves from ourselves when we're malfunctioning. That's all I have for you today. This was the Euro Trade on Market Stoker D. Enjoy the rest of the day, and I will see you tomorrow again from Belgrade. Take care.